Hey everyone, Cotton Candy TA here. Welcome to Beginner's Course Part 6, Patterns. Okay, if you're enjoying the content so far and haven't subscribed yet, go ahead and do so. Subscribe to the channel. And if you want to donate and support the cause, you can find those details in the video description below. And if you haven't done so yet, check out the Twitter account. I post all my TradingView and Twitter links there, as well as update people on content and what's coming out for material and so forth. So, all right, without further ado, let's get into it. What are patterns? Okay, let's switch over to our chart here. And today we're going to be focusing on basic attention token. It's received a lot of attention lately. So yeah, we're going to be focusing on BAT today. So what are patterns? Patterns are exactly what they sound like. They are patterns in the market that repeat themselves. They are trends and patterns and things that happen. And you guys have seen on charts kind of these valleys, right? Things like this. This is a pattern, right? This valley is a pattern that repeats itself. You can see one there. You can see one here, right? You continue going on. You see another. Oops. You see another valley right here, right? So these kind of and you see another one right here. So patterns are things that happen in the market. Kind of over and over and over. And the most important part of patterns are trend lines, right? So what is a trend line? A trend line is what forms these patterns and these peaks and valleys. So a trend line would be something like this, where you have basically a support and resistance line that happens as moves are going on, and they happen on all time frames. They happen everything from the 15-minute all the way up to the weekly and monthly charts. And kind of these trend lines and these patterns that occur in the markets. We'll just draw a few here so we can look at them while we talk. These patterns that occur in the markets, these trend lines, they kind of set a parameter, right? You have levels of support and resistance, and you have trends. So those are the two founding things that act as support and resistance levels, marquees to break through and move, and for the market to kind of change direction or make a reversal. You have trend lines and you have levels. Okay, so we're going to look at a few trend lines here, and we're going to discuss what they are. Okay, let's go back to the material for a second. So what are patterns? So that's what patterns are, and why are patterns so important? Okay, let's go through this and start identifying some patterns here and talking about why they're so important. Patterns are important because they are telling you what's going on in the move, in the moment, right? If we just draw a simple pattern right here, we're going to take this, a trend line. Well, a trend is a pattern, so that's okay. Call it a trend, call it a pattern, call it whatever you want. You can just kind of take this swing high right here, right? This swing high that started the move down, and it creates this trend line or this pattern that you can see that it has to actually come and kind of. Oh, magnet tool's on. It's being a little funky on us. Turn that off and try that again. You can see this trend line here, this trend pattern, this pattern or trend line, whichever term you prefer. You can see it kind of does this thing where it respects it, almost like a level of resistance, because that's what a trend or a pattern is. It creates a level of resistance, right? And you can kind of see it until it finally has a chance to move sideways and break through. Does that move not stop bleeding or moving down? These downtrends or uptrends, right? Same thing over here, right? When basic attention token was moving up, let's take the swing high of this move, and let's take it, and we'll take it to the next swing high, which is right here, right? It would have been this swing high is what started the move here. Okay, we might need the magnet tool back on for this one. The swing high here to this swing high here, right? So you've got a swing high, or it could have been this one. It all lines up the same. It doesn't matter. So you've got this uptrend, right, or this upwards pattern, and you can kind of see how this upward pattern is kind of respected the whole way through as almost like a level of resistance. Now we didn't draw levels of resistance yet. We are going to add them to this chart to kind of integrate the idea of patterns and trends with levels of resistance and support. But you can see how this trend or this pattern acts as resistance constantly to this coin until it finally goes up over and comes back down and breaks, and then it kind of ends its trend right there. When it loses its trend, it kind of ends it right there, and we'll talk about that in a future video. I know I always say that, more advanced topic for a more advanced lesson, but really the point of this video is to kind of identify trends and patterns and give clarity to what they mean and what they do, so that we can build upon that in future lessons, right? And then we see it come up here, and it still touches us as it would, as you know, that level of resistance, and then it continues on. And let's take a look here. The beginning of the down move here. Let's turn that magnet tool back on. Beginning of the down move here to this swing right here, right? So that's how you can start to identify these patterns or these trends. Is it's swings of moves, right? It's swing highs and swing lows to the continuing swing high or swing low. And we'll go over a bit more in detail how to identify those. But just to show you why they're so important, when you have these trends, right? Oh, let's turn the magnet tool back off again. It's being funny. When you have these trends or these patterns, they create this level of resistance that you need to break through, right? Until you can kind of stop this. And you know, at that point, when it breaks through, that is when you kind of have the continuation of the move, and it can kind of get out of that downwards movement and start a new trend or a new pattern, right? If we were to look at here, and this applies to the bottom of trends too, right? So sometimes you're using the top, sometimes you're using the bottoms, and you know, we will get into that another time. But right here, you know, if we were to take the swing low of this move and move it to the swing low of that move, well, let's turn the magnet tool on for that one. The swing low there to the swing low there. You can see how this pattern or this trend that was created is constantly acting as support. Oh, turn that magnet tool back off. It's constantly acting as support, right? You can see it acts as support to further this move, and it continues as acting as support until it acts as resistance, right? Because we broke through it, and then it acts as resistance, and resistance again here, and it tries to break through, but it kind of then fails and acts as resistance there. And this might not be that it failed where we circled, or it broke it and failed, but this could possibly be something on a larger time frame, right? This could possibly be, you see where we circled it here, that it actually didn't go through that trend. It's because it never really lost the trend on the weekly. Like on the daily, it might have looked like it was lost, but on the weekly, it never was lost. So kind of keep in mind that time frames do have kind of a crucial role in identifying these trends, because it might look like on a daily chart this thing broke down and then it broke back up and it's gaining and losing up, but maybe if, you know, we switched over to the weekly, simply switched over to the weekly here and saw that well, it actually never lost the weekly trend until this point, right? And then, you know, until this point right here, and it did stay above this trend line on a weekly chart. So you can kind of see how time frames, they will play an important role, okay? They will play an important role in identifying some of this stuff. And sometimes it's daily, sometimes it's weekly. The point being is that these trends, they exist everywhere, right? We can find them everywhere in charts, right? The swing high of this, what started this down move, to the next swing high, which would be there. Let's drag that out and see what it looks like, right? Resistance, resistance, support. You see? These trends, they exist everywhere. Let's do another one. The swing high of this to that one right there, right? Until it moves sideways, it doesn't stop this downtrend until it can move sideways and break through it. And now you'll notice something interesting here. This downtrend that starts over 1, 2, 3, 4, 5 days, right? This downtrend, it loses that level, comes down here, moves sideways and breaks, and then it immediately tests not once but twice this trend line that we have that slices right through. So these trend lines, they can act as future support and resistance over larger time frames, and you can see it, you know, right here. All we did was took the swing low and then the following swing low and created a line that kind of continues forever. And then, you know, you can even do this where you take that line, right, and you just simply copy and paste it, and at that point, you can kind of create the channel that this lives in and create kind of a channel trend. So what we would do here is we take the swing low. There would be 3 points to recognize here, so I'll label them. The swing low would be 1. Oops, this would be 1. This would be 2, and this would be 3. Now the reason this is 1, 2, 3 is number 1, this is the swing low that started the up move, right? It's not this back here because this wasn't done moving down yet. It's still kind of moved down. This was a swing low that started that move. Number 2 is a swing high before we see the next swing low. So this is going to be your first swing high. So number 2 is your first swing high. And then number 3 is the identifying of the trend. So you would start here and you would simply draw it to that next swing low and have that line continue on forever. So the reason I'm showing you this again is because if we were to simply copy and paste this bottom line to this top one, all we would do is we would take this and we would drag that to that. Oops, we don't want to do that. We want to keep it the same. We would simply drag this line and put it to the top of that move. Now let's kind of get in here real close and get this kind of as perfect as we can. Looks like right there, right? So now you kind of create this channel, right? You create kind of a swing low or a trend line, and it creates a pattern and a channel that this lives in, you know, an uptrend or a pattern trend. And you guys can see, right, as we walk through this move again, this channel here acts as support and resistance for this move. Let's turn this magnet tool back off. It's being a little spicy again, until it finally breaks out, right? And when it breaks out, it can move up. And then it comes down, it creates another downtrend. Well, look at this. It catches the top of this trend and it continues to use this as support until it closes and breaks through and then bounces between them and uses this as support and this as resistance, right? And then it breaks through it and then it's resistance there. And you can see as you move further through the move, going through some of these points here, it comes up and it tests this trend line again, right? So it's got two kind of levels to break here. So, oops, we don't want to do that. We don't want to change the coin or the stock or whatever. So you can see how these trends and patterns, they create this bound of levels of support and resistance, right? Now, the next thing we're going to do here, let's take a look at the course material. So pattern identification, we went through that. Why are patterns so important? Trend reversal. We're going to talk about trend reversal a bit, and we kind of already did, so this will be a pretty easy thing for you guys to kind of see now at this point. Trend reversal is going to happen, and before we do that, all we're going to do is we're going to go draw a few levels on this chart. We're just going to see how, because levels and trends and patterns, they all kind of interact with each other. So all we're going to do is draw a few levels here. So let's identify a few things here. Let's go on the monthly, and on the monthly we're going to make silver kind of the move. So we have the swing high on the high candle, right? We have the swing low of the low candle. Okay, so we're just identifying one kind of monthly level here. We're going to keep it very basic because, you know, simpler is better in charting and TA. The simpler you can keep it, the better. You learn all these advanced techniques and advanced topics. And also, I'm sorry, I forgot to switch it over here. I'll go through that again real quick. All we're going to do is just switch to the monthly chart, and we're going to use silver here as the monthly level. And let's delete that and just walk through this again because I forgot to switch it over. So all we're doing is identifying the swing high of the high move, right? And the swing low of that same high move. And like I was saying before, is these tools that we learn, all these advanced topics, it's almost like you have to learn this whole barrage of things in order to make it simple. You have to learn, you know, from A to Z to then do your TA and your charting with only using A, B, and C. But that A, B, and C are kind of the three most important things you identify through A to Z. But in that A, B, and C, there's a little piece of D, a little piece of E, F, you know, all the way up to QRS, the whole thing, right? So we learn all these advanced topics and things so that we can simplify it down and we can make these as basic as possible. Now, we've identified a monthly swing high and low, right? Let's go look at our weekly levels, okay? Our weekly swing low, we are going to make, we are going to make our weekly level purple. So this is kind of the swing low here, and this is the swing high of a move. And now whenever a coin opens on an exchange, you never use the first candle because it's volatile. You never use the first daily, the first 15, the first hour, the first 4 hour, the first weekly, the first monthly candle. You never use it. You always use the second candle, right? It's a general rule of thumb, just because the amount of volatility on that open is too high. So you're always using the next candle. You're always starting from there. So technically this would be our first swing high, right? And then we have the bottom side of that. Oops. Let's just use this swing low here. It won't even matter if whichever one we used actually. If we were to do this technically accurate, we wouldn't even need this one. So we've identified a monthly, a weekly, and let's identify maybe a daily level in here. So a daily level would be something in this uptrend here, right? So as this is moving up, this swing high, right? Let's see, let's walk through this. So we have this move up here, swings high before it swings low, comes up, swings down, comes up. So yeah, we're gonna use the first swing high daily levels, right? So all we're gonna do is turn this red to mark it as daily. This is the swing high right here, and this is the bottom side of that candle. Oops, wrong one, wrong tool. And this is the bottom side of that candle. So now we're going to kind of walk through this to set up for the next part of this lesson, which is, if we switch back, trend reversal, the psychology behind that, and pattern examples. So we've kind of been going over pattern examples this whole time through, but let's talk about the psychology and trend reversal and the things that happen. And let's back this out and look at this on a bigger scale now with a few of these trend lines in place. Now, before we start breaking this down into the next part of this, these levels and what we're doing here, it's important that if you guys haven't watched the previous videos on accumulation distribution, on support and resistance, on targets, on all those things that we talked about in the past, go and watch them now before you continue this video, or before we end it, or watch this and then go watch those and watch this again, or whatever order you choose. The reason being is that everything we build pieces based on what we've learned so far, okay? So everything we're talking about here, you won't follow it unless you've seen the videos in the past and you have absorbed that material and grasped it, okay? So let's kind of walk through the psychology of this move. And we're gonna start that with a quick overview, a quick glimpse of the weekly chart, just to see. Let's take a look. We have a monthly level respected there. We have daily level respected there. We have trend respected there, right? We have daily level respected, monthly broken to test a daily, daily broken to test a weekly, right? And we don't even need this, the bottom side of this weekly level. We're going to keep it, but we don't need it for this example. Then you can come up and see how we test that monthly and regain that monthly to regain the daily, and so forth. So just as a quick oversight, a few basic trend lines. This one was pretty important here as it kind of dictated this channel here, and this one may have been important here. If we were to do this to that swing high there, there may be some importance, but I want to keep the chart as kind of as simple as we can for this, because we don't want to start cluttering it up too much and making too much of a mess of it. So what we're going to do is we're going to keep that for now. We're going to keep those local trend lines that actually we don't really need them, because they're too local. They're just showing right, they're just showing examples of how these trends start and stop. So let's walk through the psychology of this, okay? And then we're going to get into something pretty interesting about Head and Shoulders and patterns afterwards. So let's walk through the psychology of this move. We've identified these trends and we've kind of seen this. And let's go to a daily chart and look at what this thing is doing, right? So we start kind of this uptrend here, and let's turn the magnet tool off, and we come up and we test this level, and we come back down, and we kind of jump in and out of here, and you notice that in this move right now we are kind of testing this monthly break. That's a pretty important level. That's a monthly level. Think about that for a second. It's not a daily level. It didn't take one day to make. It's not a weekly level. It didn't take 1 week to make. It's a monthly level. It is a level that took a month to make. It is a very important level. So you can kind of see how many times in this uptrend, so we're in an uptrend, how many times this thing was tested. 1, 2, 3, 4, 5, 6, 7, almost every single day. For how many days? We start here, what was that, March 26th, all the way up to April 10th. So you've got, I don't know how many days we're in March, let's just say 30. And we said the 26th of the 10th. So you've got 14 days where this thing almost tested it every single day before it actually broke a monthly level. That is powerful. And that is why that broke, right? So when we broke this level, notice how we didn't just skyrocket straight up, because we are still confined by other resistance levels. You see, we are still confined by this trend and this pattern. We are still confined by this trend line, right? We test it there, we test it here, we test it here, and then we are still confined by a daily level. And let's go back for a second and think about how long it took to break the monthly level. Sorry, my chart disappeared on me. Their trading view is a little wonky at times. Let's think about how long it took to break that monthly level, right? It took 14 days. Look at how long it takes to break a daily level, right? It takes 1 attempt, 2 attempts, and then 3 on the 3rd day, and it broke it, completely broke through. So, you know, to kind of put an anchor to that idea of how long it takes to break a monthly level versus a daily, you can see it right here. Really, it had to break 2 forms of resistance, but it had the momentum of breaking that monthly level, right? So it had to break 2 forms of resistance before it could kind of take this rapid move up, okay? Now, you know, without getting too far into this, we're going to come back and dissect this a little later. You know, then, you know, let's look at the psychology of this thing. This thing then acts as support. You can see it acts as support this whole way through until it moves sideways enough. You know, all it had to do at this point was move straight sideways. They didn't have to push the price down. All they had to do was hold it at the current level. Right? So think about that for a second. If price is in this range here and we are to move straight sideways, think about how easy it is to dump down into that level and break down into that. All people had to do was hold a price. If this was, what was this price here? Let's call it 4,200 sats. If this was 4,200 sats right here, they never had to actually put downward pressure. All they had to do is continuously build up these walls that would eventually, by not allowing the price to go up, it would eventually break back into this and lose that, right? So an important thing to know about trends and patterns is how you get in and out of them through that sideways motion sometimes, right? And then so now the psychology, we're in this trend line here and we're in support and resistance, and same thing here. All they had to do is push the price sideways and hold the price at one level before it breaks down, right? So now let's walk through this. Now, if you remember in the next, or sorry, not the next video, how would you know it's in the next video? If you remember in the last video about offsetting momentum and how levels offset momentum, the same thing applies to trends and patterns because those are levels of support and resistance too, right? So you can see here, momentum gets offset, it moves down, right? Momentum then gets offset again by testing this monthly level. It gets offset to test up, right? That upwards momentum and that motion gets offset by testing this trend line or this pattern, right? It then gets offset, it comes down, touches this level. It then offsets there, comes up, tries to break again, offsets by that level. So you can see how even though we have our levels of support and resistance, right, there is still that offset against, you have your levels, your swing high and lows, but you also have trends and patterns, and those are levels as well. So it's very, very important. And you can see as I'm walking through this thing, and you know, we're just going to fast forward through it a bit here and not, you know, dissect it too much further because it's going to be the same thing over again. You know, resistance, resistance, support, right? Same thing, resistance and support, levels and trends, okay? So, there is something else that happens, okay? The psychology of these patterns, okay? And we're gonna take these trend lines off for now. They are gone for the rest of the video. We don't need them at this point anymore. We're gonna leave this one up as kind of an example. You guys have seen all your trading careers. Oh, we got one more there. Let's delete that. You guys have seen all through your trading careers, people creating these valleys like this, right? Let's go to the daily chart. It might be a little easier to see. Oh, we got another one. Delete that. You guys can see these valleys that are created, right? We're going to kind of move it to where that trend line would be because we already know where that trend line is, right? We've already identified it. So let's move it to that trend line. You've got this valley here created, right? And how it lines up. These valleys that you create and you see on charts, you need to understand something very specific. These valleys are not being created because they're you know, being identified as a valley that you can see here, right? We went over this kind of briefly in a video before. This valley is identified when you have a swing high here. This valley is nothing but the hard left edge and the hard right edge of trend lines. That's all these are, right? They are acting off support as the base, and they are the hard left edge and the hard right edge. Just like right here, you know, we have kind of this valley right here, right? Well, let's take a look at this for a second. All this was, and we already drew this one time, so I'm not going to get too much into, oops, wrong one, too much into perfecting this, but okay, I'm having a bit of trouble here. Let's start over. You know, this valley here. Okay, let's grab the right tool this time. We did the swing low here, and we saw that there, right? Or, and then we kind of copy and dragged it up, and it created, this valley here, right? And the hard right edge right here, right? That hard edge right there, and this trend line right here, right? Okay, so I guess for this one it wouldn't be what we created in the past, right? Because we actually, that's my mistake. We used the swing low and created an uptrend. That wouldn't have been the hard left edge. The hard left edge would have just been the swing high to the swing high, one swing high to the next swing high. And you can see it creates the exact same thing that we see in valleys, right? It creates the exact same component, the exact same parameters of a valley. It just creates a hard left and a hard right edge. This isn't really a valley, okay? It is, but realize that the importance of the valley is the trend lines, okay? So, there is something interesting that happens in markets and in traders, and they have this thing called head and shoulders, and I've seen a lot. I've seen head and shoulders, I've seen the Batman, I've seen, you have different patterns, and they, oh, it's doing what's called a BART, and it's going to move down here, and it's going to move down there because it's creating a BART, like Bart Simpson, the top of his head, or it's creating this head and shoulders, or cup and handle, right? Like this right here. Whoa, this is classic cup and handle. We're destined to move up, right? So something you guys have to understand, none of those things are real. They are just ideas that people use because they don't truly understand the science of trading, and they don't truly understand support and resistance. They haven't quite caught on to why a move is doing what it's doing. A move is not moving up because for some arbitrary reason at this point here they said we're going to create a rounded bottom with another little rounded bottom that's going to look like a cup and a handle, like a teacup or a coffee cup, and it's a cup and handle, and it's going to create this abstract pattern where we're moving up. I'm going to show you guys something pretty cool, and you guys will be able to follow along because, again, you guys are smart and you get it now, right? So let's take a look right here. We have a swing high here, okay? We wicked past the level. We established a first touch here, and we wick past the level. That's why we're moving up, not because it's forming a cup and handle. And why did it find its base down here? And why did it create this rounding out? Because it found an accumulation zone back here off a weekly level. This isn't a cup and handle, right? There's no such thing. This is just a quick graphic or a way, almost like a kind of a cheat tool that doesn't really work, that people use to identify, well, this move may be moving up. Let's look at the most famous one, head and shoulders, because this one I always enjoy doing this. There was a classic head and shoulders pattern in basic attention token, and I saw hundreds of traders saying this move is going down because it's in head and shoulders, and we'll draw out the head and shoulders. We're going to play along, right? Left shoulder here, very basic. Oh, we need to turn the magnet tool off or this is going to get really funky. Okay, left shoulder here, right? Head right here, okay? Right shoulder here. Okay, let's just drag this down to complete that. Classic head and shoulders pattern. And oh, look at that, we move down. Head and shoulders before the dump. This is dumping because we're forming head and shoulders. Let me tell you guys something, okay? This right here, when this happened, there was not some magical three valley play that people had made up and said, well, look at, guys, we could create a head and shoulders here, so let's cumulatively, as the market together, let's all see this pattern from back here, and let's create three valleys where one valley is small, and then the middle valley is going to be the biggest valley, and then the right valley can be some arbitrary thing in between, a small valley all the way up to somewhere that's not quite as big as the head, and then it creates this head and shoulders in this great pattern. Let's leave that up there and let's dissect this move with the knowledge we know so far, okay? This pattern and this trend, and I love doing this because it's an eye-opener for so many people that these patterns and trends and charts that people are seeing, they don't make sense. They're not real. It's what people are using because they're not understanding the true science of why something is happening, right? And because they only see this move at this point and they're like, head and shoulders, it's dumping. No, let's talk about this. Okay. These silver lines are monthly levels. We already know that, okay? We come up, let's even take it further back, okay? We, right here, come up above this monthly level in the attempts to try to touch and establish a first touch on the next monthly level. It fails and doesn't happen, okay? So let's go to where this Head and Shoulders starts, okay? We need to know that this move didn't have enough momentum to reach this, okay? So if it's not reaching one monthly level, what's it gonna do? It's gonna touch down to the next monthly level that started it, right? There's two monthly levels. There's the top side and the bottom side, and if it just traveled through the bottom side but can't reach the top side, guess what? It's gonna touch that bottom side again. So right here, we touch the bottom side of a monthly level. We know that that level is going to offset momentum. So what's going to happen, right? We are touching this monthly level at this point right here. We know that we need to use that momentum, that offset momentum, to touch up here, to touch this level right here, the next monthly level. Very simple ABC 1 and 2, monthly level. So we use that momentum to offset. And again, if you don't understand momentum offsetting, go and watch the previous video on I think it was the most previous one, lesson 5, I believe. If it's not, it's number 4 or it's one of those. Anyways, we touch this level. The next trajectory is up here to touch this monthly level somehow. We come down, we bounce off a daily level, offsetting the downwards momentum in the hopes that we can establish a first touch of this monthly level. It doesn't happen. Well, what's going to happen next? Think about it for a second. If we have touched this level once, what do you end up doing in a move? You establish first touch followed by first test. First touch is getting rejected 90% of the time because it's the first time it's touched the level. Right here is first touch, right? That is very important. We don't first touch the level above. So what are we doing? We immediately know that when we lose this right here and we can't gain a new high, we are going to go down and test that monthly level again. So look what happens. We come down, that momentum offsets off the daily, we come back up before we end up taking our first test of this level. We establish first touch here, we establish first test here. That wicks the level. There is not enough support at that level to hold it. It wicks it, we know we're moving down. Right? And what happens? We move down until we hit this point where we get offset by a weekly level. We just hit down on a monthly level. It's going to take more than a daily level to offset it, right? The level strength is important here. Another lesson for another video. The weekly level offsets it. We then come back up and we break over it again, possibly now establishing another potential Head and Shoulders pattern, right? Potentially establishing. You see why this looks familiar, right? Because look what happened over here. We broke above it and then we came back down to try to set up another test on this level. We have not tested this level yet. If we look at the grand scope of things, right? Let's delete all these funny arrows for now, okay? I know this always takes me a second. I wish there was a way to, but if I, Control Z and back it up, it kind of gets a little funny and charts start deleting, and TradingView is not, it's a web app, right? It's not a third-party app on my computer, so it's a little funny. Oops. Right? So let's delete all of this. So we know, and we're going to leave this one because that was a test that hasn't been touched. We know we have created a high here. This is a pattern, right? We know that we've created a high here. We need to establish the first test of that, the first touch of this. We didn't actually establish a first touch. So in basic attention token, what's going to happen here? Can we potentially make a Head and Shoulders pattern that touches this level and then completely rejects and does some other thing? Or what's going to happen? We don't know, but we know the goal is to establish a first touch up here before we can actually go through a first test. So we are not, for some reason or another, creating a Head and Shoulders or some kind of pattern that we can't possibly know exists. We are just simply following levels, right? And another example of that is people are, they use cup and handle, and a cup and handle looks like this. It's kind of this rounding bottom, which is the cup, and then it kind of has the handle on the cup, right? Kind of like a teacup, right? Like if you were to draw this here like that, like it would be a teacup, right? Or whatever. You guys get it, cup and handle, right? Well, look what happens here. This dictates that move is going up. And you know why cup and handle dictates that move is going up? Because look at, what does this look like? What we just talked about. Level gets established, which is right here. Level gets established. Come down, we establish first touch on this, right? First touch, which was supposed to be here. Then we move above it. Are we really creating a cup and handle for some arbitrary reason of this object from life, or are we simply just do we simply just have a swing high? We've established first touch and then first test can break it. What makes more sense here? Does it make more sense that we are using right, the cup and handle or the head and shoulders, or does it make more sense that these are levels and the science of why things happen and the exact reason as to why these patterns exist and what happens? I'll leave you guys to make that decision. I hope the clarity that I've given in this video can make that decision an easy one for you, and you can kind of see that these patterns are nothing but, okay, come on, I can't grab it. Okay. I have a feeling that I could potentially be at this for a few hours. No, I got it. Good. It's like, old man syndrome. I'm getting older, when things aren't quite lining up anymore. I'm not that old. I'm getting, mid-30s. Anyway, it's not important. It's not old man syndrome. Just whatever. Anyways, so, really what makes more sense here? Are we creating these abstract patterns, or are people using these abstract patterns as justification because they don't quite understand what's happening in the move? I'm going to leave it at that at this lesson. I think we covered quite a bit, and let's go back to our list here. We covered what are patterns. You guys know what they are. Why are they so important? You can see why they're so important now going through this video, the grand scope of things. Pattern identification, how to identify them. You've got the first swing high to the next swing high, or the first swing low to the next swing low, and you're just simply drawing a straight line. It's just a trend line. Very basic, and I'm going to go through that one more time, just in case people don't have questions about, okay, how do I do this? Okay, we're on a daily chart, and just to go through it one more time really quickly. Where was one that we used? We used this right here. So how I identified this one here from earlier in the video, all I did. Let's adjust this a bit so people can see it a bit easier. All I did was at the start of this move, so you see how this move is starting to move up. I've taken the first swing low, right, and it makes a swing high before it comes down to its next swing low. This wasn't the swing low because it didn't finish going down lower. This was it right here. But it could have been the next candle down here or whatever. So all I'm doing is taking that swing low and one swing low to the next swing low, or one swing high to the next swing high. So we have a swing high here, the move kind of comes down, curves out, and it has a swing right there. So I'm taking that swing high and I'm lining it up there, right? So this swing, and then that's the swing, and then it acts as support. So just to identify one last time, in case you guys don't know how to identify these trend lines, it's swings to swings, either low or high. Trend reversal and the psychology behind that, and how these trends reverse and how they break these lines, and pattern examples, and kind of going through going through why these patterns exist and them in real time. So that's it. Beginner's Course Part 6, Patterns. I hope you guys enjoyed it, learned something. Don't forget to subscribe. Thanks. Take care.